Happy Friday. Eric Bible with the Bible team at Neil Home Loans. First and foremost, as we approach Veterans Day tomorrow, I'd like to extend my sincerest gratitude to the brave men and women in uniform, those serving in our armed services, but most importantly, those that gave the ultimate sacrifice. For your courage, commitment, dedication, and sacrifice to this great nation never go unnoticed, nor will they be forgotten. So again, thank you. This morning, I bring more encouraging news on the mortgage interest rate front. As we know, last week we saw significant declines in mortgage rates off their recent highs, and this week those declines have held. This morning, we opened with the 30-year fix sitting approximately 7.49%, down from last week's close at 7.51%. So the question becomes, have we entered a new range, and can we expect further declines going forward? Market seems to believe yes, and ultimately here's why. As we know, last week we had a slew of economic data and economic information from the Fed to the Fed speaking to jobs information, all painting a picture of an economy slowing at a much faster rate. That is what sparked the declines the previous week. This week, we did not have a significant amount of data. If any, we had no economic data slotted to be released this week. And through the week, the gains held. Now, yesterday, Jerome Powell did take the podium in DC at a monetary funds convention and provided a little more clarification that the Fed is still prepared to hike rates, but Wall Street ultimately is still betting against the Fed hiking in the future. So there were some turbulence yesterday, which the rates could have been or should have been lower this morning. But yesterday's comments, coupled with a bond auction in the tail end of the afternoon, rates pulled back slightly. Now, I want to preface this by saying the expectation walking into this week, given the fact that there were no real economic reports to look to and provide further insight of a slowing economy, the fact that we have effectively held the gains of last week is a huge win. And here, the important component to look forward to is next week we get the Consumer Price Index report for the month of October. There we do expect another marginal win for inflation, which if we see additional declines in inflation, we do expect that this momentum, if you want to call it, or decline in interest rates to continue, as really the market is looking to further evidence that the Fed is done with their hiking cycle. As Jerome Powell has been very clear to state that if we continue to see gains in inflation pulling back, weakness in the labor market continue to expose, meaning uptick in unemployment, deterioration of job creations, the Fed's work ultimately is done. Now, again, we need to see additional support through economic data to support this. But again, the fact that this week was quiet on the news front and these gains still held is a huge win. And knowing again that we have very significant data next week, game on. So as that information comes, we will absolutely support. But what I want to continue to drive home is that, yes, we're in the winter months. Winter is rapidly approaching, and we all know what winter brings: a slowing market. And now in a market where we've already experienced significant slowdown, the expectation for the winter months is an even more pullback. This is the time for our clients to take advantage of the opportunity. We know this to be true. We look back to last year, this same time, the clients that purchased into the winter months beat the competition. They were met with less price competitive, less offers, more ability to ask for concession from the seller. The same is true in this market. And if rates continue to decline, the competition is only going to pick up. So the narrative to our clients needs to continue to state that it is an optimal time to engage in real estate. The forecast for future interest rates is promising, as we know the economy is pulling back, and the Fed at some point will stop this fight against inflation, which will drive mortgage rates lower. We know inventory is an issue, and as rates come down, inventory does not come online, home price pressure will only accelerate. So again, it is of the utmost importance. The message to our clients is now is an optimal time to purchase. If you are running into challenges with communicating this message to your client base, please reach out. We have wonderful tools, amazing presentations to help in communicating this message forward. Additionally, I've included a national housing survey for the month of November. We share this every month. It is incredibly meaningful information. The link's in the body of this email. I strongly encourage you to take 30 seconds out of your morning to complete. I'll be sharing the results next week. Again, make it a fantastic Friday and an even better weekend. And again, to our veterans, those serving who have served and have given the ultimate sacrifice, we thank you. Make it a great day and talk to you soon.